Hey guys, Taylor with GammaEdge here, coming back to you with another educational piece. This time we're going to be talking about the delta balance tool that we've developed. Essentially what this does is it shows us the positioning out in time of call and put speculators, both above and below spot price. And the value of that is we can understand what their positioning is today, then we can understand what the positioning is out in multiple expirations out in the future to understand if there is confluence with that or not. But before getting into more of that tool, let's first just walk through why the options markets even matter in the first place. And so for background, the options market has grown 5 times, not 5 times, but 5x in just the past 3 years, right? And that's what this chart displays down here. This is where we were in Q1 of 22. We've come all the way up here to Q1 of 25. Now, most specifically, SPX 0DT options alone make up 50% of all SPX options trading, with over 1 trillion of notional value changing hands daily. And then again, I know this chart's a little small, but that's exactly what this is showing here. This is just a composition of SPX volume and more specifically kind of the tenor, that being 0DT and others. What makes options markets particularly valuable is that they're inherently forward-looking. While price charts only show you what has already happened, options reveal where speculators expect price to be in the future across multiple timeframes. This forward-looking aspect matters because markets are price dependent. Today's positioning influences tomorrow's price movements, which then impact and shape today's actions, tomorrow's price action, so on and so forth. So by understanding how speculators are positioned not just now, but across different future expirations, you can see the expected roadmap from point A to point B to point C. This is precisely why we developed the delta balance tool. This unique visualization doesn't just show us current positioning, but future expectations in one clear view. It reveals whether call speculators, bulls, or put speculators, bears, are gaining momentum, exactly where that momentum is focused, right, above or below current spot price, and how sentiment is evolving out in time. So in this lesson, or watching this video, you'll discover exactly how to use the delta balance tool to see exactly where market expectations are focused across different time horizons, spot shifts in future positioning before they impact current spot price, identify where the structural path supports a sustained trend higher or suggested resistance, and then using divergences between current and future positioning to anticipate market turns. So with that, let's explore how this essential tool can help you navigate market structure with greater confidence. What even is the delta balance? As we said just a little bit ago, the delta balance tool visualization shows us the ongoing battle between call and put speculators above and below current spot price. Think of that as your real-time map showing where bulls and bears are placing their bets. By tracking the balance of calls and put delta, you can see exactly which side is dominating and where they're focusing their firepower. So again, now we're getting into the specific delta balance tool, which is the visualization looks like this. Again, I've marked it up here just to help visualize things, but this is what the visualization does look like. So getting in more to the specifics, there are 3 key lines. There is the green line, the orange or red line, and the blue line. The green line represents what is happening above spot price or on the right-hand plane. As a reminder, an option above spot price can only be an out-of-the-money call or an in-the-money put. The orange line, this shows what's happening below spot price. And again, we call that the left-hand plane as well. And then an option below spot price can only be an out-of-the-money put or an in-the-money call. And then the blue line is the net balance across the entire structure, which incorporates both above spot price and below spot price. Right, and then each line tells a simple story. Above the 0 line here, above the 0 line, that means calls are dominating. Below 0, that means that puts are in control. And then, right, just like the GEX ratio, the trend of the delta balance sign is very important. Again, here is historical information. Here is the future expectations. So again, are those lines trending higher, or are they trending lower, or are they staying stagnant or the same? Right, and just to clarify, the expirations in this red box are showing the future expirations, which is your window into the market future expectations. When future expectations show a different picture than current positioning, which would be here, or really this is past positioning, this right here would be the current positioning, it can be an early warning sign of sentiment shifts before they appear in price. So that's really the beauty of the delta balance tool right here is Great. Yeah, it's great that we understand what's been happening in the past, but what's more important is understanding what's happening in the future. And so if there's a crystal ball into the future, this is kind of one tool because again, options markets are forward looking. And this is basically us plotting what those future expectations look like relative to what they are currently. So you've like already come to the conclusion of why this is important to your trading. But just to kind of reiterate that point, so using one example, traditional technical analysis focuses solely on price patterns, leaving you blind to the underlying forces driving those patterns. The Delta Balance tool solves this problem by revealing the actual positioning of market participants. So think about it this way. Price charts shows you what already has happened. Delta Balance shows you what market participants are betting will happen next. This distinction is critical because options positioning only often shift before price does, giving you an early warning sign of potential market turns. Right. And so, like, if you're a technical analysis trader and you don't find this beneficial, that's fine. The one thing I would say to that is, yes, understanding price action is important, but one thing that doesn't tell you is kind of what's happening under the hood of the market. If the structure is deteriorating, I would think that's something super helpful to know. Or if it's strengthening, that also would be something super helpful to know. Right. And simply just looking at price action and, I guess moving averages don't give you any of that information aside from the singular thought of price is moving higher, therefore it must be strengthening, when in reality, under the hood, that may not be the case. And so going back to the Delta Balance tool, the three key benefits that it provides you as a trader is one, structural insight, which, effectively reveals whether bullish or bearish positioning is dominant above and below current spot price. It can be an early warning system, which often showing sentiment shifts before they appear in price action, which is what I was just hitting on. And then at future expectations, the plot of the Delta Balance for the future expirations visualize for us the future expectations of speculators in terms of price appreciation or depreciation. Right, and that kind of sounds like a jumbled mess there, but effectively, the Delta Balance helps us understand out into the future, are expectations more bullish, more bearish, or are they staying the same? So right, let's now get into how to read the Delta Balance tool and apply it. So one, going out in time, it's important to understand where each of those lines is in relation to the zero line. Again, the zero line right here. So, focusing on the current positioning, we have the blue line, which is the net of above and below spot price line. Again, above zero overall call dominance, below zero overall put dominance. In a bullish market, we see, because remember that this is an oscillator pinned between -1 and 1. So in bullish times, we always see this pinned to 1, and in more bearish times, we see it pinned to -1. And then in between those two levels is generally where we're getting some kind of market shift. And it's just the same thought with the green and the red line, orange line. So the green line above spot price, kind of the right-hand plane, above zero call dominated, below zero put dominated. Same thought with the red line. And then understanding, if it's trending higher or trending lower is important as well. Right. So after you understand who's in control, kind of identify the structure type. Again, bullish structure, bearish structure. Bullish structure is you're above zero, trending higher. Bearish structure, you're below zero, trending lower. The next is to track the structural evolution and future expectations. So right in a strengthening bull trend, that is where we see out in time, we see, the green line, the blue line, the red line, all trending higher. In deteriorating bullish trends, we see those, above zero, but trending lower. Bearish trends, right? Those are below zero, trending lower towards -1. Then a deteriorating bullish trend is they're below zero, but they're trending higher towards zero. So again, going through the specific example here, we can see out in time, this is for NVIDIA on 5/9/2025, just for a reference point. The blue line, which is our kind of, net of the two, this is pinned at 1 currently and in the future, which again is a bullish reading. We have the left-hand plane line, which is above zero out in time, but it is weakening a little bit. However, to counteract that, we have the right-hand plane line, the green line, which is trending higher out in time, which is constructive to see. Right, both of these are zero. Right-hand plane is strengthening towards 1, and then this is pinned at 1. So net, the structure does remain dominant out into the future. Right, and again, this tool is really good because with any other analysis that you do, it should hopefully be a confirmation tool. If you're in the market for bullish trades, those stocks that you're looking at should have this bullish signature out in time to where you have call dominance above and below spot price, or if you're bearish, put dominance above and below spot price. And then we want to be looking for those divergences between current positioning and future expectations, which could be a bit of a warning or a caution sign. So getting into a couple, FAQs, common objections. How is delta balance different from traditional sentiment indicators? So unlike traditional sentiment indicators that simply measure, overall put call ratio, volume, or just things only on a price chart, delta balance specifically shows you where sentiment is concentrated in the market structure. It reveals not just where bulls or bears are dominant, but exactly where they're placing their belts relative to current price, not just now, but in the future. So said another way, we can look under the hood to see, okay, are call or put speculators more dominant? And is that consistent out in time? Is that strengthening it? Is that weakening? Can this tool predict exact price targets? So the simple answer is no. Delta Balance isn't designed to predict any specific price targets. Rather, it shows you the structural forces that influence price movement. Think of it as revealing the path of least resistance rather than an exact destination. So when used, alongside tools like the market trend model or the GEX ratio, it helps you understand the why behind price movement. That is, price is moving higher. Okay, great. From a technical analysis point of view, you may say, okay, price is moving higher because it's above the moving averages. Okay, not super helpful. But if we can say they're moving higher because A, momentum is coming into the market, B, calls are coming into the market, strengthening the structural environment, that's a lot more useful. Next question, what time frame works best for delta balance analysis? So this tool is particularly valuable for multi-day to multi-week trades, right? Reason being is its true power lies in showing structural shifts across different time horizons. Swing traders often find the most value by monitoring changes in future expirations by early signs of trend changes. How often do I need to check the delta balance? We find that for active traders, checking once in the morning is sufficient just to understand any structural changes day over day. Next question, what if the red and orange lines show contradictory signals, right? That is the above spot price and below spot price lines, if those are showing contradictory signals. That's not uncommon at all to see, right? Mixed signals often indicate a transitional or consolidating market. These mixed structure scenarios typically lead to more choppy price action, range-bound action until one side clearly takes control. During these time periods, shorter trades or reduced position sizing may be appropriate. And then how does delta balance work with other GammaEdge tools? So this is a very powerful and complementary tool along with our other tools. But right, specifically, use it in conjunction with the GEX ratio to confirm market sentiment trends. Again, market trend model to understand if there's any broad momentum in the market, and then with the web app dashboard to understand where those key structural levels at, and then if you have the underlying kind of call or put dominated supporting when we break through those key levels. Right, and the greatest unlocks come when finding confluence between our different various tools. When they all point in the same direction, your conviction in the trade increases significantly, or it should, right? But it's not only the trade, like delta bounce is very important for understanding just the overall general environment of the market. So, applying this to SPX as an example and just understanding how participants are positioned out in time, very important because the SPX is so massive, as we just went through at the beginning of the lesson. By understanding SPX, you can kind of generally understand the market's positioning as a whole. And then to the extent you want to, we did another specific deep dive on pairing the delta balance tool with the GEX ratio. So final thoughts for you, the delta balance tool offers a unique window into market structure that price charts simply cannot provide you. By revealing the positioning of call and put speculators across different time frames, you gain insights into not just current sentiment, but where the market expects to go next. Again, said another way, we can analyze those future expirations to see where market participants are positioned, right? And just hitting on that point again, what makes delta balance particularly powerful is its forward-looking nature. The visualization of future expirations often signal trend changes days or weeks before they happen on the price chart, giving you a critical edge in positioning ahead of major moves rather than chasing them after they've begun. Through this lesson, you've unlocked how to interpret the three key lines, the green, orange, and blue lines on the delta balance chart that reveal who's winning the battle above and below spot price, identify different structural patterns and what they tell you about potential price action, right? Again, understanding, if the right-hand plane line is trending higher above zero, left-hand line is trending lower below zero, what those specifically mean. Again, tracking how positioning evolves across time, out in time to spot strengthening or deteriorating trends. And then, right, using future expirations to anticipate potential reversals or trend changes. Remember that the Delta Balance tool is most effective when used a part of your broader analysis. When combined with other GammaEdge tools like the GEX ratio and market trend model, you create a comprehensive view of market conditions that can significantly improve your trading decisions. By incorporating Delta Balance into your daily routine, you'll start to see the market through the lens of actual positioning rather than just price movement itself, a perspective that can transform how to trade and help you stay consistently on the right side of the market. So, right, a good way to start is by monitoring Delta Balance for the major indices and a few key stocks on your watch list. Pay particular attention to any divergences between current positioning and future expirations, as these often provide the earliest signals of important market turns. And so with that, that's all that I got for you guys tonight. Hopefully you understand the Delta Balance tool and how it is applicable to your trading. Specifically, notice kind of understanding the broad overall environment that either the stock is in or the general market is in. And so with that, until next time, I will talk to you all later. Thank you. Bye.